I could listen to that tune all day. It's my favorite right now. But let's get to it. Happy Friday. Actually, first things first. I just dropped that study note. This one here. Honestly, I just feel like I would highly suggest you guys listening to it for yourself, especially the weekend is coming up. Take some time, put some time aside, take a pen and paper, and then definitely go ahead and listen to this. But I went through it myself. I actually listened to it maybe about 3 to 4 times, and then I was taking notes. But there was just so many points. Okay, so many points. I'll go over quickly some of my favorites that just hit differently. Number 4 here. Turn your losses into clues. Failure is a constant companion in a trading journey. Failure teaches you how to recover. This basically shows you how to have an open mindset when it comes to losses, when it comes to failure. Really, a lot of us we kind of just get stopped on our track when when our stop loss gets hit, when we see our when we're down for the day, down for the week, and whatever the case. Okay, we've maybe went through 10 trades and all of them hit break even, all of them hit reduced risk, but literally have a growth mindset and then turn your losses into clues, find out what you're gonna need to do next. Um the other one was that I just put this here like an affirmation. This is all I know, this is what I do, this is who I am. Somehow I'm going to figure this out. I just feel like this hits differently. Um especially when especially when you've been active for a while. So I know, Adam, for example, you're doing this for 1 year. First of all, congratulations now. But like, when you're like 3 years, 4 years, at least 5 years in. So for example, for me, this June is going to be 5 years. This is all like this is the skill set that you've put to, you put your mind to achieve, and this is what you want to do, and this is who you are now, right? So somehow you just have to have this deep, honest conversation about no matter how low you get, no matter how high you get, this is something that you're gonna have to figure out. Um, because this is you. And just to link that with this, right? This is also another quote that I like. My success comes from my love of the markets. I'm not a casual trader. It is my life. I have a passion for trading. It's not merely a hobby or even a career choice for me. There is no question. This is what I'm supposed to do with my life. Um, I feel like when you can get to that state, it just hits so. I actually do that, bro. I actually do that myself. I actually just like how he's doing his NY calls. I actually do that myself. So I would have it. I would be logged in on my Zoom, and then I would record myself and I would talk to myself and I would have my camera on, and then I'll show you. So I would actually have like a trading session, all of my trading session. Reason being is because when I'm like 5 years down the line, bro, I can actually go back and I have a so this year I actually wanted to. This is all of my trading sessions. So you can see here, like I would have, and this is all private, like this is all me. But I have my London session, I have my New York session, and I'll talk about what happened. For example, this was the ECB press conference. So it's like I'll be here and I'll be talking to myself and I'll be recording myself. This was the spring budget that we've had recently. This was the pre-spring budget. So yeah, I think I would highly suggest that. And this you can come back and then you can review yourself. Bro, you gotta do crazy things to have the crazy money, right? So yeah, I definitely suggest that, man. This for me has been key because now you can actually not only because like when you have your backtest journal, right, you have your before and after. You have your before, you have your after, but none of this here mention any emotions. Um, you could have on your chart, you could have like a piece of note here that says looking for this, state of mind is like this and that. But it's different when you have it on screen, when you're actually recording yourself. And I think the key thing is be absolutely honest with yourself. And talk about why that point of interest is, and then when you're done with all the technicals, go into the mental and the emotion side of things. Talk about how your day has been. Talk about how maybe yesterday you've slipped some sort of entries, and then that made you feel some type of way, and then this made you feel some type of way, and now you feel like you want to get back to the mark. Whatever the case is, just be absolutely honest, because you're actually building yourself. But yeah, quickly going back to this, right? So that was my second favorite. Other one that he said, the other one that he said was this one. I'll go ahead and the other one that he said, which was this one, I've had a bad day or a bad hour. I need to be very careful not to let that wipe 20 years of really good progress. Because sometimes, obviously, when you're in your journey, you can have higher highs and higher lows. And what you're going through right now, you could be a plateau, it could be a curve, the start of a curve, or whatever the case. Don't let that be deep enough. So then your 20 years of progress should just would just mean nothing. So this is where he also talks about having a lifeboat. Whether it's your mental state because you need to hit your plateau or whatever the case. Um, yeah, so just make sure that you're not allowing yourself to affect that 20 years of progress that you've had so far. Well, in his case, 20 years. But I would definitely suggest you guys read this for yourself. For me, this is what I found out to be true. And then I'm just gonna finish off with this one. This is my third favorite. So your trading success has more to do with figuring out how to heal yourself from negative limiting emotions than learning how to trade on the screens. So this means your method, your strategies. So your strategies, your indicators, your volumes, your schematics, whatever. Your trading success has more to do. I'm not saying that this does not matter, but this says that it has more to do with figuring out how to heal yourself from your negative limiting emotions. The screens are going to fail you, i.e., your indicators are going to fail you, your schematics are going to fail you. That doesn't mean that it doesn't work. That doesn't mean that the strategy does not work. But if you don't work on yourself, you're going to fail yourself. Do you have because us we're human beings, right? And I previously talked about this about how we have emotions outside of the market, and because we're the same person outside of the market, we're the same person coming in. But when we're coming in with our emotions. Majority of them are horrible. Majority of them are bad. Majority of them are attached to something. But we're coming into the market with all of these horrible emotions inside us, and your success is really going to depend on the ability to overcome that and move through those to a strong enough sense of belief in yourself that you're able to just continue to carry forward. Okay, because and then that links up to point number 20. If you come into the market so that the market can make you feel better about yourself, you're dead. Okay, so whatever emotions you have prior to coming in to London session, New York session, and then you know what you say, let me just make a quick buck here, and then that would make my day better. You're already dead. You're already coming into this state, into the market with a different state of mind. So, as I said, guys, definitely, I would suggest you listen to him. He's definitely knows what he's talking about. He's got 20 years of experience as a retail trader in the market. So, there's that. There's also another one here called Letting Go. I don't think I've listened to that one. I need to double check, but I want to say this one is a good one as well. Cool. Okay, let's get started. Okay, so I've got these four to go over. I've got two missed opportunities, and these were pro trends. Both of them were pro trends. I've got two missed opportunities. I got this as a hedge. I feel like this is a great example to talk about hedging. And then this was just a pro trend limit trade that we saw happening today. So let's get started on this one actually. What is this? Something like this one. So this one didn't save it. Okay, let me go to this one then. Okay, let's do Let's see what I've got in here. Got a bunch of things. Oh, I don't think this one is a accurate one. Pepperstone, I'm gonna have to. Okay, I'm gonna have to do it maybe on. Okay, let's do it on no wonder. Um, I know what, let's just go do that, man. Sorry, guys. Okay, cool. I'll just delete a couple of things on here. Okay, cool. Let's well, that would actually save us time because I've already got the structure parts here. So okay, cool. We don't need to go far to find out where we are on the higher time frame. We can definitely see yeah, we can definitely see this was the previous break. So this is essentially our higher time frame leg. We can see a reaccumulation, we can see a distribution here, a redistribution, redistribution, and this is the one that's causing that caused the break. Cool. So when we look at our intraday now, for me, this is our intraday. And again, do let me know if you're not seeing it the same. But for me, this is my intraday. And then inside this intraday, we've got this is our MC, this is our SC. So this is our lower time frame here. So essentially, when we look at this now, we know that we have. So now that we have found our legs, let's look at our point of interest. We know we have got this as the MC somewhere in here. But this is what this is our lower time frame MC extreme, and then the cause for me. Cause for me would be somewhere in here, right? We can see that redistribution here, where we had some sort of mitigation because we could see sellers coming in. We could see the sellers coming in. We can see an attempt to accumulate. We can see the distribution. We can see the eyes, and then there's the break that actually goes ahead and causes the new high time frame. So this for me is my lower time frame SC. I'm not going to pay too much attention to that because we've actually traded through it. And we can see that we've traded through it here. So now when we look at our leg, let's just say even from here, when we look at our retracement leg now, because that's what we've got, right? We've got our retracement, and we can see that very clearly, right? We've got the booth here, we've got price goes above that SC. We can see them reaccumulating. We can see here another well drawn out. I don't even know how long that has taken, but from here to make a new high, it's about nearly close to 2 months. We can see them, they've started the retracement leg. So now at this point, I've either got two options to play. I've got option one, which is my favorable option, which would be to come here, wait for price to come up into the lower time frame MC, place some sort of limit, which out of whatever full volume candle that we've got here, and then look for the distro. Okay, look for the distro, place the limit, and then play the continuation, right? So that's my option one. My option two is see if this maintains, right? We've got this as the bullish booth, so this is what's maintaining our order flow. If we can get a break here, then when we come up here, we can look for a continuation order flow play to go down, right? Because there's no guarantee that price does have to come up into our extreme when they have no agenda, when they have no reason to. So if sellers are coming in from the market here, we can just wait for the booth, and then we now have a cause and effect, right? We've got this leg has actually caused a new low, and then we can play the distribution from here. So that's what we had to wait for. Place an alert here, place an alert here, place an alert here. That's his booth. And then I guess that would be the other one. Booth here, and then play the continuation to go up into this box here. Okay, that for me would be the hedge, because then what's to say lower time frame holds. What's to say price comes into intraday? We don't know. Bear in mind, we've just made the higher time frame low, so straight retracement could start all the way and go to the intraday leg. So there's so many opportunities, so many possibilities. We just need to prepare ourselves for. Cool. So let's just see what options the price action actually gives us. So maybe speed up a little bit. Okay, so we actually get a break here. Right, you can see that. So that first one, I wasn't actually I didn't know what to make of this. But we've actually got a proper confirmation right here. Okay. And then now when we look at this, let's look at our legs. So the process stays the same, i.e., we look for our MCs and we look out for our SCs. So here, there's no two ways that this is our registrar. We can definitely see the attempt to accumulate here, and then we can see our MCs here in that distribution here. And what I actually like about this is if you go back, and we go to here. Okay, so I like the fact that I don't know why it's not showing. Why is it not showing? Oh, look at this. Okay, there you go. So this was when we had okay, so this is what we've got. We've got this here now. This is what's holding the order flow leg now. But again, we don't have a well drawn distribution here. And we've got this essentially the manipulation here as Asian highs. Okay. So that's something I'm gonna have to pay attention to when we get inside that price action when price comes back up into there. But before we do that, we now need to look at our slingshot. So we now need to look at our inside our slingshot, which is up here, right? And kind of same story, except from we've got this. And look how clean this one is, right? I mean, I don't even have to go. Do I? I mean, let me ask you guys. Do I need to go any lower time frame than this? Would you, if you saw that? The only thing I would do actually, the only thing I would do is I've got my I had a candle. I forgot what the candle was, so let me just check that real quick. What's that? That's 18 and 31. Sorry. So the candle that I saw was the 18-minute right here. That's pretty good. Yeah, and then the 31. There you go. So do the same thing. Essentially, we've got 18-minute, 18/41 minute, and then we've got 50. Okay, cool. And then also the other thing I'm gonna write down here, and something that I've been backtesting for myself is this. Let's go back to that. We can. There you go. So this is London Open Thursday. I like to mark my Thursdays London Open and my Thursdays New York Open. I found them to be really, really powerful, especially if it's in a point of interest. Like this for me is such a very such a powerful point of interest, because what do we have? Let's break it down. We've got a type 1, right? Type 1. We've got Frankfurt Open. Okay, so Frankfurt Asian liquidity sweep. And then we have got London Open is in here. And then the second thing is it holding something? Yeah, it's the cause. So it's got cause and effect. And then it's the MC. Oh, sorry, it's the SC. SC of the leg, but it's the MC of order flow. Okay. Because then if we break this and go above, we're now bullish order flow. So this point of interest is really, really, it's a key, well, really powerful. So now we made a low. This is what's holding order flow. It's a slingshot. It's a redistribution, well drawn out redistribution. We can see them attempt an accumulation. You can see them taking out all of these early sellers. Manipulate this, manipulate, distribute, and then off we go to make a new leg. That's something that, as I said, I can just go ahead and throw a limit there. I'll split my risk into 3. Like I said yesterday on the call, I'll split my risk into 3. I would have 1 at the 80. I would essentially 3 and 4, because I'm splitting my risk into my 50s and my 80s, like normal, offsetting it. Somewhere there. And to my 80. But at the same time, I'm also going to have my risk here. So 1/3 of my risk is going to be trying to get a distro just in case price comes into here, right? 1/3 of my risk is going to be in the limit, split in 2 ways, 50s and 80s. And then 1/3 of my risk plus reduced risk is going to be after price has mitigated or has not mitigated, and then I'm trying to catch the redistribution. That in total would give me my 0.25 or my 0.50 risk. Okay. So that's how I would do it. And again, we just need to now see what happens. And target wise, as I said, we've got this main target to go and go through that, and then we've got this one to go and make a new leg. Right now, at this point, do we know that price will turn around from there? No, not really, right? Because this could all be a shakeout here. This could be the the creek, and then we can have a reaccumulation, and price could still come ahead. So remember that we are playing order flow, and this is slingshot by slingshot order flow, right? So all of this is that's the retracement leg that has broken. It's not anything. We're not playing in an area. So watch what you risk. So for me, this is going to be 0.10 risk, and my 0.10 is my order flow risk, and I'm going to have to split that between 3 ways. Okay, cool. So now let's see what happens when we get up in here. This is your chef, so it's going to move a bit slower. So we'll see. Okay, so price is coming into our point of interest, but we get this break. Right now, as I said, this is where I'm going to throw my 1/3 of the risk in here, because we don't have to come deep into here. We can see the sellers coming in, right? And we've also got a booth, and let's look at what's in here. Hold on, let me see if I've got the same point of interest. 71 minutes, is that? Yeah, 71. No, 70, sorry. Yeah, this is the candle that I've got. Does it not concern you that you're only in a second drive? Not when it's like this. Not when we have obviously this. So hold on, let me just move this, because what I would also play is this. So we've got this liquidity grab Asian here. We know that we've got our 70-minute full volume candle here, and we've got this low. So I'm trying to now play this. I'm playing this for price to come in here and then go down. And if price does go above, that's why I'm only risking 1/3, and I would have 1/3 hitting up in here. So I'm playing this, and it was only because we saw that. It was only because we saw that. Yeah, it was only because we saw that, and London is what's holding it. We took out the low, and we've also made a booth. So for me, this is valid. And then I said 70, and from here we've got this, and we've got 50. After 80. Okay. Let's see. Gotcha. Yeah. Cool. And I mean, I've got it here on my actual one, but look, the structure is all bearish for me here. So there's no reason for me not to take a slightly, I guess, an aggressive sell. Okay. Cool. So I still got my limit sitting here. Still got my limit split sitting here, and now I'm actually gonna go and throw half of that 1/3 into here, because then the other half I would look for the same thing. Essentially, I would look for distribution if I don't get that limit. If price comes ever so close, and then just distribute and then go down. So the other half of that 1/3, I'm going to be looking for a distribution here to just literally go down with it. And then cool, we just fast forward. This for me is not something I'm going to play. I don't. So it's just a redistribution. It's just a continuation. It's not. It hasn't done anything. It hasn't broken anything. So this for me, I'm not even going to entertain it, and price will tell you. Okay, so now we're actually coming inside that point of interest. Let's look at where we are. So we're Tuesday, and we're inside New York and London crossover. So we go down now, and then we look at this. Let's see what we've got. Let's see if we're actually printing something. So we actually, this is now into Asia. So we have nothing here. This could actually be something. Especially if we can get Asia just bouncing around, and then we get that London pop, or we get that Frankfurt pop, we get that London that gives us the break, and then we get New York that comes and give us this. Let me just put our, just so that we know where we are. Oh, sorry, so this one is up to the 80, and then this one is up to, okay. So at the moment, we don't, I mean, apart from the first drive, we don't really have anything yet. Okay, so we're still much waiting. And we get a break. Nothing too major, and it's not something I want to play just yet, because this is not holding anything for me. This is still Asian, so we could very much get that Asian liquidity grab, something like that, and then come down, and then we can obviously carry on with the play over. So I'm still watching this. The only thing that we can now actually look at is we've got our trading range. Okay, but I definitely need that sort of manipulation. That is what I need. Either that comes in and taps me in, perfect. And even if that goes and actually we trade above and then we get that break, then that's still something I could play. Oh, yeah, there's also another. This way. So it's still, this is nothing. We do get this liquidity sweep, okay? And now the only way I can play that is maybe if we break this. Maybe if we break this and then we can come up. But let's also look at where we are. We could see this as a one drive, two drive, and then this could be our third drive, and then we can still get a pop. Okay, so if we don't break this, and now we've actually gone into the second trading day. So this is now Thursday. Okay. Um, so let's look at what so this is our point of interest, and price has been lingering around for about 1 day, coming up to 2 days, right? So I know I personally then I deleted this order. Actually, I deleted both order simply because we have now come into, so I left it on till Thursday. I've deleted it when it came to Friday, but then I saw today that this happened. So New York, so yeah, so this is Thursday. So I deleted this just when Thursday closed, because essentially I wanted that pop to be further up, and we never got that. We came and we mitigated inside that, and then this is what happened today during London. It came right into the 50, would have still maintained your 50 position, and just missed your 80. Now I'm not sure if you would have added spreads. Tried to look for a micro in there, but couldn't really see anything. Anything to It didn't give us a well-drawn micro. So nothing that I could have taken here. And by the time I saw it, it was too late for me to put my limit on. And I guess then the second thing is, let's look at the obviously the session timing, but look at the volume when they come in, right? They spend a better half of 2.5 days to create that sort of liquidity in here, right? To get all of these formal guys coming in, to get all of these formal guys coming in, to get all of these, I don't know, resistance traders coming in, and then this is all that we needed, right? And then when they did mitigate from that previous 70 London Open candle, they didn't wait here for long, okay? And then off they went, made a new low. You would have reduced risk here, break even here, and then maybe take some partials at the end of the trading session. No, no. So as I said, I deleted my order Thursday. So here. So before I went to bed, I deleted my order here because I didn't want Asian to come in here, or got tapped in Asia, and then London gives me that manipulation, and then off it goes. So I would have taken an unnecessary loss because I wasn't, number one, I wasn't up for to trade manage it, and then number two, I have no business trading Asia. My plan doesn't tell me to do so, so that would have been on me. Would you have planned to? Yes. So this is, yes, yes. So this is now, we've now clearly got the, why not put it back on during Frankfurt? What, during here? Here, like here, come up like this. Yeah, cool. Because this is Friday, bro. This is Friday. So this is today's price action, and I'm not heavy, not as heavy as Thursdays. If this was a Thursday, then probably yes. This is a Friday, so yeah. Cool. And then yes, so the redistro, yes, of course. So now that we have broken this, and now that we've shown the smart money hand, definitely this is where we've got to play, right? We can see them taking this out. Where are we pro trend? Yes, we're bearish. Do we have a bearish booth? Yes, and then we've got this as well. So this is where we can look to carry that on. So that, I think, I haven't checked, but I don't think we'll come back just yet. Yeah, we haven't come back, which is good because then this could be this is something that we could look at for tomorrow. So that was how I saw this opportunity and how I went about it. It took me literally all day, all week, sorry. Um, every session, every London session, New York session, I've been looking at this and then just been working it, but then essentially it did happen, just not with me. So cool. So that's that. That was that entry. Now I'm gonna do another missed entry that I looked at. And I can definitely tell that you guys maybe have not seen this. Amit, maybe you have. So this is Nifty, Nifty 50. It's got a ring to it. All right, cool. So I mean, I don't need to go any further back for us to say that higher time frame were bullish as hell, right? Higher time frame were bullish as hell, and let me actually put this on here. Structure. Let me just do all of them so then I can. High time frame. Enough. I think I want to say lower time frame is bearish. Check. Yeah, lower time frame is bearish. But this one was such a clean price action. Very, very, very clean. Yeah, the fundamentals line up as well. Okay, cool. So high time frame we're bullish. Need to shoot off one of the. Oh, okay, no worries, bro. Take care. Enjoy your weekend, man. Okay, so I'm not gonna go on high time frame. I'm just gonna start off here. This is our intraday. And that has happened after we went and we broke this. Okay. And then from that we can see this is our accumulation in here. This is our reaccumulation that causes the break. And then we've got a distribution that's currently holding lower time frame at the moment. Cool. So now when we come into here, cool. When we come into here, we can see, what can we see? I mean, before I go down, can you guys see it already? Maybe if I do that, can you guys see it? Yeah, yeah, accumulation, right? So we can definitely see them. They try to distribute. We could definitely see some profit taking, some sellers trying to come in, and then here got this bad boy accumulation inside our reaccumulation, inside the shakeout. So this is definitely screaming, pick me, pick me. And then obviously, does it have cause and effect? Yes. So we not only do we make a booth, but we actually go and we make an intraday high. So this is another key interest for us to come back into. Maybe I want to say that okay, I didn't look at it. Yeah. So let's just mark that up. This is our bullish slingshot of intraday. Okay. Now that we have got our point of interest, this is how I will be personally looking at it. So I will look at it as, obviously we've got our distro here. It's not so well drawn out, i.e. it's not a type 1 or type 2. Well, we know we've got our distros, we know they've come into here and they've pretty much pushed price down. So I'll be looking for an accumulation in here. So I'll be looking for buying opportunity here, and I'll be looking for a hedging opportunity here. So this is where I'll go and I would hedge. Distro. So that's it. So I'm neutral with the market. When price comes into this POI, I'm looking for buys. When price comes into this POI, I'm looking for sales. That's it. I'm in between. I'm not looking to trade this market here. Yes, I could find a 1 to 100 inside this here, 1 to 100 inside this here, but what's the point if it's not holding, you know? Like I want to catch one trade in here that I'm able to ride. That's how I like to trade. So essentially we just have to wait for price to come into here, throw a bunch of alerts. I would throw an alert here that says made a new low. I would throw an alert here that says come inside point of interest, inside the 50, inside the 80. So throw a bunch of alerts, and then obviously the one where we go and make a booth. Cool. So price went ahead and made a new low. Now price actually got me to go down into my time frames, and now we'll just be looking for something, right? We're looking what the market is doing. Cool. So I actually like how, see that 1 drive, 2 drive, and 3 drive, and then we get a booth. And this is all inside this point of interest, right? So even if you were to go back all the way back to here, let's see where we actually come down into. Okay, cool. Let's look at that. I personally I didn't look at it as type 1. This is our 50%, 50% of spring. And this is 80% of spring. Okay, so look, we came right into the 50. We tried to make a third attempt, but we never came deep enough into that 80. Adam, bro, let me show me how you would see this as a type 1 personally. 1, 2, 3 drive, and then that's your fourth. Okay. That's not how I personally saw it. Let me show you how I saw it on my actual one. But let me show you how I was waiting for it to come. Go this way. Okay, so that's on the different one. Okay, this is how I was seeing it, bro. It was still my because remember we only came into that 50%, so I was actually hoping for us to make a lower drop. Okay, so I saw this as type 1. This was my trading range. I saw this as 1 drive, 2 drive, and 3 drive, and then we could potentially get a 4th drive as our spring, and that would be the 80%, and then we could get a booth. But of course, price never gave us that. So this is how I saw it as type 1, type 2, which is 1, 2, 3, and then this is the whole thing I measured. This is the 50, this is the 80. There's imbalance in here, and this is the booth that we would needed. That gave us our sign of strength, and I would jump across the creek from here. Well, actually, just a jump across the creek, because the sign of strength would come after, and we actually saw that. So, and I think this was 204 candle that I saw, and this is when price actually came back. So price came back into that 50 once again, and came ever so close to the 80. And I mean, you guys would know what would happen next. Let's talk about it. Where's my hair? Okay, so this is, as I said, I looked at that 204 was a nice candle, that last drop. I was still anticipating another drop where we could get something like that. And then because this was when we saw all the bearishness from the indices. Okay, we saw US 30, S&P 500, we saw some bearishness coming in. So that's where I actually was anticipating another drop, and then we'll pick up from there. But as you guys can see, we never got that. We've instead reacted from the 50, came into the 50, and then we filled up some of the imbalance inside this, and then off we went. This would show us our sign of strength. And there we got our sign of strength there. So we've got our type 2, attempt to distribute, quick, there's accumulation, so we've got reaccumulation, and then off we go. And then that was all inside our slingshot that causes a new intraday high. And then now I'll be looking for, so before I can now play this, I'll be looking for I'll be looking, okay, cool. I'll be looking for price to take this out, and then maybe come back. We can look for another accumulation in here. In terms of limit, maybe that 80% will be back on once we break this high, not before we break this high here. This draw. Was there an entry in the accumulation? This one? This one here? No, because we never broke the order flow here. We would have got a micro in here because we can see that. We would have got this one, but I would have personally played this one here, and I would have needed that to break. Let me show you that. Go down. So maybe you would have got this one. Okay, and then there's that break that you would have needed. Oh, by the way, this would be different because this would be India's time, and this is their New York, essentially. So our Asian would be their New York, which is why you maybe see some you'd say it differently. Okay, yeah, I guess you could see this, but that for me that's not where what I was hoping for. Especially the fact that we never even took this out. If this maybe took that, and then I would have maybe threw some risk into this as well as looking for a micro, which we would have got. So yeah, cool. Any questions on this? But also just goes to show like how you can learn something, how you can learn one methodology in the market, and then it applies to different markets, different pairs. Essentially it's the same thing that we're looking for. Okay, so there's this one, and then okay, by the way, Adam, remember yesterday on the team call you was asking about for seeing buyers. Go see this, see this, see this, and obviously now we've definitely seen this, so that I know you would have no worry about. But can you see this? Try that. I can't line it up anymore. But do you see what I mean? Do you see what I mean? And I guess now, yeah. But then do you see how you see those things inside your point of interest? Like you could see this anywhere else. Of course, you can see this anywhere else, but especially when it comes inside your point of interest, and then you have so many other things aligning it. You have probably divergence, which I haven't even checked for. But yeah, so you got divergence here. So it's all about the market is telling you something. It's all about trying to, as I said, like listen to it, listen to what it's doing. Okay. It's again, it's inside your slingshot. Slingshot, we look for an accumulation. When it comes to accumulation, we're trying to see those buyers. We're trying to see them coming in, and that's going to stop all the selling. This is heavy selling. You can see that. You can see all the heavy selling that was coming in, coming in, coming in. Then we can see obviously them trying to make a stop to it. We can see them slowly when they're selling. We can see them trying to take some of the buy orders, and even here, right? I mean, there is that micro in there. So there's this. Okay, now I've got another one to go over to show you, just to need something to get trained. Okay, cool. All right, awesome. And then the other missed trade for me, and I feel like those two would have been the trade of the month. But let's go over oil. All right, let me actually do on this one. It will be easier and save some time. Right, so again, same thing. So we broke higher time frame here after this. Let me come on the weekly. So for me, this was my previous distro, redistro, and now we broke that. Okay, so this is my entire high time frame leg. When we then come inside, we have got our slingshot right here. Got our slingshot that causes the break. Not in any sort of reaccumulations like the one that we saw in Nifty 50, but it was still we can see them, right? We can see them accumulating orders to go up. So we know some demand is sitting there. And then we then obviously measure from 50 to 80, and we wait for price to come inside that point of interest. Same thing that. So this one actually saw this. I also saw this as a type 2. 1, 2, and then this is essentially just free. This for me was not anything. If I've got it drawn out. Yeah, so this is how I was seeing it. So type 1, 2, and then this alpha drive. So this is the everything that, and then this is the booth that we would have needed. Essentially, we did get it. So this is our 50 and our 80, and then from because we started our retracement, right? We can see the retracement has started. This is the 50 and the 80, and then this is what I was waiting on to see us price come in there, look for an accumulation. Now you can see I was still waiting for our fourth drive, just like how I did on Nifty 50. I was still waiting for our fourth drive, to come inside that 23-minute and that 9-minute. And this is where our slingshot was being maintained at. Yeah, and then there you go. We never get that. It comes into the 50, very similar to Nifty 50, and then off we go. And yeah, we can see that here. So I try to wait for some sort of pullback to come and play inside this, because now this is what's maintaining that order flow leg. Look for an accumulation in here, but we never got it. Just we're still in that sign of strength phase. But again, going back, you see how you have your heavy selling, and you see how you got like a stop to the sell, and then like we get this that will eventually give us the break. Yeah, so that's what you like to look. Like Mike used to say when his earlier trainings, Mike would say when price comes into your point of interest, this is what I guess helped me. He would say look for compression. Okay, so essentially look for compression, but then look for big volumes inside the going into in the direction that you want. Okay, so when price is coming in, price would tend to come in hot, especially when it's a sell, right? If prices, if I mean, sorry, if it's a buy, and then price is coming down, we know that when price is going down, they tend to go down much faster. So when price is in your POI, try to look for that compression, and then that compression is what would allow you to give you that tight entry, because then that's where we know they're accumulating orders, and then we can get type one in there after that move, and then off we go. Okay. But yeah, so that was it again. I'm slightly gutted that we never became down deep enough. This was such a good POI. I've had my limit there. This was London session in here that swept all of this, and then we went and we made a new high. So it's a shame, but it is what it is, and we just have to wait for the next one. Okay, this only took so after making a new high, only took about a year to come back. So we just have to wait for another year, right? Another dollar. Okay, cool. So that's pretty much those three that we went over. And then this last one. Jake, I know you feel my pain, man. Okay, cool. So this one is a really great, and it's not something that I trade, don't worry. But just flicking through the pairs, I saw this. I thought this was a great pair to go over hedging. Because essentially we would just be playing inside the market cycles. I'm not gonna do a top down, but we can see this is our redistro. This is what's maintaining the slip, correct? We can see attempt to accumulate. Accumulation doesn't break that, but it comes inside and it essentially helps price to come into it. So what do we know? We know that demand has come in here. Sorry, we know that supply has come in here. We know that demand has come in here. So we essentially do the same. So when price comes into here, we look for supply, so we sell. And when price would come in here, we look for demand, so we look for a buy. But obviously, price hasn't come back into here yet, but when price does, we can look at it. So how you would have catch that sell here is you just have to wait for the 80, which I'm not sure how you would play this, because I know for me, if I got tapped in, or even here, and then after making that new low, I would have gone to reduce risk. So I know here my reduced risk would have got here. And even if I try to enter off here again, I know that after making this new low, the reduced risk would have got hit again in here. So yeah, it's one of those ones, I guess. But with this, what I'm trying to say, like you can see the redistribution, and we can see the sellers coming in here, right, inside that supply point. So we're essentially looking for the same inside here. And I'll give you an example, because I was actually looking for something on Thomas's favorite pair. This essentially very similar price action. Can we look on the chart to see? Let me go back. Can you look in that third drive to see what happened after it slipped? I looked at this. We don't have anything in here. If I'm looking at this like that, but we do have this micro inside there. Now, for me, after being burned out realistically twice, I doubt that I'm gonna throw a little something in here. Yeah, nothing in there, but maybe inside this, right? We can go back. We can see the type one in here. Yeah. With that, we can see in actually, well, after the break, we don't really get anything. Just see. So yeah, this is the break that we would have needed. It would just be one of those sell stops then, up to about 50, and then from 50 to 80, or 50 to actually the full thing. But yeah, we've got this. But again, realistically, I doubt I'm going to throw a little something here after being burnt out twice previously. Yeah, but let me just go over USD Mexican to go over that. So so yeah, essentially, look, it's the same thing that has happened in here. So we know we're bearish. We're bearish from here. So where did price come into? Price came right into the intraday mitigation candle. All of us, I think Jake, yourself included, maybe we was looking at some sort of accumulation in here, because this was essentially the slingshot that causes the break. Now price traded through that, and then we've now inside this 50 of the mitigation candle of the intraday. So when price is coming inside here now, we react inside this 50% of the mitigation. We don't really have a type 1 or type 2 anything, but the only thing we do have is divergence. Got divergence, and then we know that we have reacted from that 50. And then we've still got this redistro that we need to work through. This essentially is what's maintaining the whole leg. We need to work through that. But whilst working through that, we can get ourselves into a hedge, because what's to say that the intraday, just like at the lower time frame, does not hold? Or what's to say that if we can get into a micro in here, inside this hedge, and then the 50 gets clapped, and then we come inside the 80, and then we can see some sort of accumulation. So for me, ever since I've started to plug into Mike and then learn about hedging, I've really become neutral with the market. And because I've been neutral with the market, I don't mind, what's the word? I think me and Jake, we were talking about this like way back, about how being neutral with the market really helped with our mindset, in terms of we could come in and then we could just be both sellers and buyers to the market. And this has really helped. Yeah. So here, like, we could see this distro holding out. If I go down, there you go. A little too far away. Yeah, so actually I'm maybe on the same page with you, bro, because when I was actually speaking to some of the someone else, so he's a portfolio manager. Now, hedging, the whole purpose of hedging is not to make money, but to stop your bleeding. So how do I make sense? So this is how we was talking about it, right? So think of yourself as a gardener. Okay, think yourself as a gardener, yeah. And you know how you have different flowers for different seasons. Like, for example, here in UK we have daffodils for like springs, and you have like maybe some I don't know, something else for something else. So essentially, you're a gardener. So as I said, yeah, let's just see your gardener, and then your job is to make this garden flowerful for all year. And what I mean by that is you've got your spring, you've got your autumn, you've got your summer, and you've got your winter. So you need to actually throw seeds in there, throw flowers and plants in there that would keep your garden, like, you know, beautiful and pretty throughout the year. Like, you don't want it where like it's gonna be where maybe spring is over and then autumn is coming, or spring is over and like summer's coming, and like, you know, these plants are dying, and but then these ones are like coming up, and then when summer is over, then you have these flowers are dying, and then autumn is coming up. Do you know what I'm saying? So essentially, this is your garden is your portfolio, and then inside your portfolio, how we were talking about it, is inside your portfolio, you need to have pairs in there that is going to work as a hedge when this summer is over, when spring is over, when winter is over. So throughout the year, it's your machine is churning. Is that making clear, or did that just make sense in my head only? I don't know. Let me know. But I don't know, when we was talking about it, it just made so sense. Yeah, so it's the same thing, I guess, here, right? So you do like when and that has helped my perspective with it as well. Like, I'm not like with this hedge, I'm not trying to hold on to it forever now. Like, I'm into this, but I don't mind taking 50% off. I don't mind taking 50% off here now, because we've come inside another point of interest that I would try to look for an accumulation. So that's why obviously once this level goes up next, next Monday, next Tuesday. I'm gonna try to see if I can work into something. Now, if this doesn't work, and then like even with this now, right? If I can get into this, so this is how like neutral this would be. Like if I can get into this and then I come here, you best believe I'm gonna be taking something off here. Reason why is because this number one is not an accumulation. Number two, we haven't broken, we haven't made a new high. We've come in, we've reacted pretty well, and we've got a type one in here. We've got one drive, two drive, three drive. There's our U tide. We've got a break. So whatever I do get in here, this is going to be a hedge, and then I'm gonna also try to work inside here, and then whatever one wins wins. So if I can even with small risk get into here, and this does not hold, I take out 25% to 50%, whatever, and then this goes and break. Okay, I'm happy. If on the other side, I get into here, and then price comes in here, I take out 25%. I manage to get into a 50% or 80% entry, so micro in there, and then this does not hold, I'm still happy. Your job as a trader is not to call out direction, is not to be with the trend. Your job is to make money. Let's not forget that. That's the number one. So whether you're making it through, like, the money is the money. Your account is not going to see that if you've made 2% of hedging or 2% of pro trending. You know what I'm saying? So cool. So that's again, but hedging would come so far down the line. You also need to get the basics first in terms of seeing how everything else works. I mean that's how I did it, and I'm still trying to get my head around it. Cool. The other one, which again happened this week, was this bad boy here. Superb. Been following this sucker for a while now, and yeah. So this one, we got the booth. Got the booth. Crazy looking at the whole thing. Man, there's 50, there's 80. Try to look for something in there. So we still want to see if I can double down once we get a booth, to come back and then look for something in here. But yeah, that was good. Cool. Yeah, so that's pretty much all I've had. Let me know if you've got any questions before we can wrap it up. No worries. Did you actually? Because I know. Did you see anything this week, Jake? Not really. Yeah. So even for me, like, there's only a couple of things. I tried to look at USD Chef, but I didn't like where we reacted from. I was trying to get into a redistro after failing to maintain this, but I didn't like how we came into this, and then we kind of went. Now I guess I could play essentially this redistro because I like what we've got in here. And if Tuesday or something like that we get up, that would be good. To at least go down and take it into here. So very short term, and then I would try to look for a buy in here. So yeah. Cool. I tried to look for a hedge on this, but it didn't work. So we obviously we come inside. We've come inside this supply, and we've kind of like we've redistributed. We made a booth, and then we've accumulated. So I was trying to see if we could get into a distro just to maybe even take it down into here because that's where my next buying opportunity was. So my plan was to see if we could escort price to come lower into here to then get a buy to go up. Or so this is where I would be selling, and then this is where maybe I would look for a buy, and then this is where I would look for a buy, or break, which I think that's what we're going to do, and then come back into this accumulation here. So this whole thing turns into a reaccumulation, and then we look for a pattern to obviously carry on forward. Yeah, so the other one is with German 30. I tried to look for something in here as well, but this very same thing. So I think even if I was to go back into here, indices, you'd see like I don't know when this was. This was literally a year ago. Look at this. This is so crazy. So a year ago, I was looking for that. And after a year, this has happened. So yeah, fun. Okay, cool. All right, guys. So I think that's pretty much end of March, really. I know for me, I would have closed out March on a negative. I took some. I didn't manage to get into any trades um that I've carried forward. Majority of them maybe turn into reduced risk. I want to say not even break even. Um, but I'm actually painting my room tomorrow. So after that, I should be done within a day. After that, I'm gonna sit down and then close up March and then see where we was at. But I've still got some runners from February, so that should add on. But in terms of March, it's been kind of dry for me. Um, but we'll roll on. March is done. We ain't even gonna worry about it. Roll on April, and then we'll see where we are. Cool, guys. So I'll catch you guys in a bit, and see you next week.